Hey everyone, it's been a crazy ride for Laurus Lab share. During COVID, Laurus Lab share price zoomed 10 times. Yes, 10 times return in just 2 years. And that made it one of the hot stock last year. However, since its high during August 22, Laurus Lab stock is down nearly 40% in last 15 months. And I have received multiple requests to cover this stock. The biggest question is, why the share price is falling? And is there any change in Laurus Lab fundamentals? So in this video, we will investigate the reason behind fall in Laurus Lab share price and should you buy, hold or sell the share. But this video is only for educational purpose. You should do your own research before investing your money. And before I get to my video, I would like to tell you that my podcast Personal Finance 101 with Sahil Bhadviya is now available only on Spotify. So now you can listen to my podcast on Spotify for free. In fact, you can now also watch my videos on Spotify. So do check out my podcast in both video and audio format. I have provided the link in the description. Alright, now let's get started with today's video. Before we discuss the reason for fall in Laurus Lab share price, it is very important to understand the business of the company. So Laurus Lab is leading pharma company that caters to diseases like HIV, cancer, diabetes, asthma, etc. It has mainly 4 business verticals: API vertical, FDF, that is formulation vertical, synthesis vertical and bio vertical. Let us try to understand each vertical in detail. First vertical of Laurus Lab is generic API manufacturing. APIs are the key raw material for any medicine. Laurus Lab is a leading API manufacturer in the world, especially in the area of ARV, that is antiretrovirus. This API used in manufacturing medicines for treatment of AIDS. Then Laurus Lab also manufactures APIs that are used in treatment of oncology, that is cancer. So currently antiviral API and oncology API constitute the largest share in API manufacturing of Laurus Lab. In addition, company also manufacture APIs for treatment of cardiovascular issues, diabetes, asthma, gastroenterology, etc. Then second vertical is formulation. Laurus Lab not only manufactures the API, they also manufacture the final medicine that falls under FDF, that is finished dosage form category. The biggest advantage is that company can use the in-house APIs for final medicine manufacturing that result in lower cost and higher margin. So in addition to ARV APIs, company also manufacture finished dosage for ARV segment. Then third vertical is synthesis. This segment caters to contract development and manufacturing services, that is CDMO business. So Laurus Lab also manufacture products for many global pharma companies, including analytical and research services. The products and service offering include nutraceutical, dietary supplement and cosmeceutical products. Then fourth vertical is bio. This is a new business division where company offers fermentation-based product development and manufacturing expertise as a service, that is CDMO, to novel protein companies and biomanufacturers. So I hope now you got a good understanding of key verticals of Laurus Lab. The reason why I have discussed its vertical is because some of its verticals are doing great, while some are struggling with negative growth, which is mainly impacting company's earning and ultimately the share price. I'll come to that later. But for now, you should also understand which vertical contributes how much in company's business. In FY22, company generated a revenue of 4,936 crore. Within this, its finished dosage contributed 38% in the revenue, API contributed 41%, and within that, ARV API contribution was 25%. Then CDMO business contribution was 19% and 2% was from bio vertical. So major business of the company is from API, followed with finished dosage and then CDMO. However, there is a sharp change in company's revenue breakup. At the time of IPO during 2017, Laurus Lab had revenue of 1,905 crore. Out of this, 80% revenue was from ARV API. So you can see that how company has evolved into other verticals and reduced its dependency from ARV API from 80% in FY17 to 25% in FY22 revenues. Interestingly, CDMO business did not exist few years ago and now contributed 19% in company's revenue in FY22. Now that we have got a clear picture of company's business, let us try to understand the reason for correction in Laurus Lab share price. So Laurus Lab launched its IPO during December 2016 at levels of 428. Although it splitted its stock from face value of Rs 10 to Rs 2. Hence, adjusting stock split, the IPO price was Rs 85. For the next 3 years till COVID, Laurus Lab share did not move. It hovered in the range of 85 to 90. This was a time when pharma stocks were underperforming. In fact, year on year, Laurus Lab was consistently growing in terms of revenue. Its revenues jumped from 282 crore in FY11 to 451 crore, 719 crore, 1326 crore, 1775, 1892, 2027, 2236 crore. So there was no single year when the revenues fell down and profits jumped from 9 crore in FY11 to 22 crore, 88 crore, 97, 145, 200 crore. Although there was fall in FY18 and FY19 profits. So Laurus Lab was growing exponentially during that period, but it was not reflected in its share price. And then COVID hit the world. This resulted in sharp jump in demand for medicine. Since it was a black swan event, nobody knew when will the world normalize. Hence, everybody wanted to stock up the inventory for medicine. The sharp demand for medicine benefited many pharma companies. Laurus Lab revenues jumped exponentially from 2,236 crore to 2,797 crore in FY20 and 4,769 crore in FY21. In terms of margin, Laurus Lab that used to command an operating margin in the range of 18 to 20% suddenly saw operating margin hit 32% in FY21 due to sharp demand for medicine. As a result, its profit zoomed crazily from 95 crore in FY19 to 267 crore in FY20 and 956 crore in FY21. This created a huge trigger in Laurus Lab share price that jumped from the lows of rupees 70 during COVID and made a high of 700 plus rupee, generating 10 times return within a span of 18 months. However, once the economy started reviving, the demand for medicines started falling, as the distributors have already stocked up the inventory. As a result, all pharma stocks saw a sharp dip in their earning growth. Laurus Lab was no different. Its revenues that jumped significantly during FY21 saw a dip for the first time in last 10 years. Operating margin saw a sharp dip from 32% to 27% and hence profit fell down from 956 crore to 750 crore. As a result, Laurus Lab saw profit booking and the share tanked from highs of 700 plus to current levels of 450. Laurus Lab recently posted its Q2 result and its revenues have grown by 31% year on year and net profits have grown by 15% year on year, although the profits declined 7% quarter on quarter. And it seems the market was disappointed with the results and Laurus Lab share has tanked 16% post results. One of the reasons is that Laurus Lab has lowered its revenue target guidance for FY23 by 10%. Now it is very important to understand the performance of each vertical. So finished dosage, that is FDF vertical, has fallen by 70% year on year. FDF vertical has posted very weak number and revenues have fallen from 491 crore in Q1 of FY22 to 349 crore in Q1 of FY23 and now at 149 crore in Q2 of FY23. Within generic FDF, the fall is led by ARV segment. Although management is expecting recovery from Q3, then generic API verticals has done well with 29% year on year growth. Revenue of this segment has increased consistently in last 3 quarters and this growth is led by other APIs. If you look at the sales mix, ARV API contributed 60% in Q2 and other API contribution has grown from 24% last quarter to 33% in Q2. The biggest growth has come from CDMO vertical that has grown by 365% year on year. Look at the way revenues are growing consistently. Company is creating a new R&D center and 3 manufacturing units in FY24-25, all dedicated to CDMO activities. So the biggest laggard has been the finished dosage vertical and its CDMO business is growing exponentially. Net-net, Laurus Lab is currently trading at levels of 450 at a P ratio of 30. And I strongly believe that the future prospects for the company are very bright. And this fall has created a good opportunity to accumulate Laurus Lab in a systematic manner for long-term wealth creation. Company is fundamentally strong under the leadership of Dr. Satyanarayan Chava. And company is seeing strong demand in CDMO segment and its formulation business is expected to improve now. Moreover, company has diversified from ARV business to other categories like anti-diabetic, cardiovascular segment, etc. Company has given a capex guidance of 2,000 crore rupees for FY23 and 24 and 50% capex in CDMO vertical and rest in ARV segment. So the long-term prospects are very bright. No wonder even the DIs are adding Laurus Lab consistently from 3.56% in March 21 to 4.15%, 4.81, 6.9, 7.93, 9.11 and latest holding at 9.34%. Even the brokerage houses are bullish on Laurus Lab. Recently, Motilal Oswal has initiated a coverage on Laurus Lab and given a target of 610 rupee. ICICI Direct has given a target of 675 rupee. Jefferies has given a buy rating with a target of 567 rupee. I hope now you got a good picture of Laurus Lab business and the reason behind fall in share price. For long term, as I mentioned, Laurus Lab has a bright future prospect and looking attractive at current levels after the fall in share price. So if you have long-term viewpoint, you can consider adding Laurus Lab in your portfolio. So this is it for this video. If you find this analysis useful, do subscribe to this channel and press the bell icon to never miss an update. And let me know which company you want me to cover next. I'll see you next video. Till then, take care.